here is the trend. Uptrend, consolidation, sideways market, and compared to the volatility, here is choppy market, very choppy, and it's getting better and better and better. But suddenly the breakout failed, so instead of breaking out, commit above, here comes a resuming of the volatility with resume of the supply level. So if we look at this consistent high supply level, although compared to the past, it's slightly better, so decrease a little bit, but this is still relatively high supply because it didn't get to the level something like this. So this is the relatively low supply level, or even here, low supply level. So here close to 2 million, and here is also roughly around 2 million. That's relatively high consistent supply. And compared to the volatility, is better than segment 1. Okay, so this is 2, this is 1. So segment 2 is not as volatile as segment 1, but compared to this middle segment, let's say this is 1.5. So compared to segment 1.5, segment 2 is definitely a lot more volatile than segment 1.5. So until we see there is a decrease in the volatility back to about segment 1.5, and also decrease of the supply level back to about probably 1.5, it's likely going to chop. So means that so far we have a trading environment like very choppy, whether it's to the upside or to the downside. Look at this bullish momentum candle and all this big candle, bearish candle, relatively choppy. So the battlefield or the zone that is likely going to travel is likely to 68, or even here, this is a zone 6760 to about 6800 as a support level, support zone, back to 7,000. That's the high. So chop around, test the support, test the resistance, and to see whether we'll have getting an increase of the supply level, especially right at the resistance level close to 7,000. So we already have a temporary bottom form around 6,800. Look at these two demand tail. So that's the demand tail touching the 6,800 level. Found the buyers, found the support, attempt to rally, but roughly into one half of this bearish bar. And yesterday, there is another sell-off, so minus 1% or more than 1%. So right now, it's still lack of quality demand or the aggressive demand to push the price up. So at least compared to the past, let's check out. This is a rally, very vibrant, good rally. Here is a rally, vibrant, good rally. So when I say the vibrant, you can definitely take a look at the size of the candle. So for example, consistent bullish candle, big candle, and also this is also consistent bullish candle, relatively big candle. Here is even better. So strong bullish momentum, reversal bar. But look at this few candles. So this is the indecision candle. Chop to the downside, chop to the upside. Found the support with a demand tail, bit of the rejection tail, bit of the rejection tail, bit of the little doji bearish candle. So not as vibrant as before, although it still managed to climb from 6,800 all the way to about 6,920. But look at the speed compared to the past. Continuation of 5-6 sessions to the upside. Here is also roughly about the same. Continuation of 5-6 sessions to the upside. Here is also roughly about the same, but with stronger momentum. But here, continuation of 5-6 session, but not really to the resistance level 7,000. So compared to 1, 2, 3, and 4. So this one shot, or at least 6 sessions, 5 sessions, go to 7,000. Rally 2 is about the same. So this is done in 6, 7, or 5, 7, 5, 6 sessions to the 7,000 resistance level. The third one, the third rally, is also the same. So only 2 sessions hitting the 7,000 resistance level. But rally 4 is still relatively weak. Managed to climb to one half of the magnitude, so roughly about 6900, 6920. Okay, so comparing to the past, the rallies is not getting better. So this is really just the first concern I have. Second concern, supply is still relatively high. I don't see a decline of the supply, and also volatility is still there. So this is the bearish characteristics, at least for now. So we need to still wait for at least a week or two, and to see whether we'll have decrease of the volatility and decrease of the supply level. So right now, here is a pattern that looks like a diamond formation. So a diamond formation is not like a bullish or a bearish pattern. It could go either way. So it really depends on the direction that it breaks out. So it could just become a reversal pattern. So for example, this is rally and then going in through this diamond formation. And especially with the other half of the session, like here, is getting more volatile. So this is turning slightly bearish for the diamond formation. But if it could just go up and break out from here, I think it could still settle itself out and going up. Otherwise, if it breaks down and coming back down, then another test of 6800, 6760, so back to the zone. And with inability to rally up, this will become relatively bearish, at least short term, going to test the next level to about 6500. So this is the next meaningful support level, 6560 level. So if indeed it happened, then we would need to reassess the whole structure. Right now, here is definitely still looking short term, slightly bearish, but it's still too early to conclude. But based on the characteristics that we discussed earlier on, for example, increasing of the volatility at the diamond formation near the breakout end, and also consistent high volume, and also in terms of the rally compared to the past, the rally from last week is relatively weak. So just a few points that give me the impression this is slightly bearish, but we still see quite a lot of the rotation going on at the moment. At least tech is still under pressure, while a lot of the real economic sectors like home builders, not too bad, but I think industrial machinery and energy, those are the sectors, or even biotech sectors is not too bad, are still looking relatively strong. So far, I will definitely avoid technology, apart from a very small group. For example, the optic, LITE, COHR, and CIEN, and also the memory storage like Micron, Seagate, Western Digital, SanDisk, and also Another sector would be the, I think semicon is actually looking great as well. So at least if we look at quite a lot of the semicon stocks, or even just this ETF, the SMH, is still relatively strong. For example, if you take a look at the ASML, I think it's still very resilient. SMH is actually looking quite nice. Still looks like pending a breakout formation. Okay, so still relatively strong. But apart from that, there are quite a lot of the growth stocks, momentum stocks in the hot team take a big hit, and yeah, still need to take time to restructure. And other sectors like defense still looking quite strong. Anyway, so let me just finish the index first. So this is the S&P 500. Short term wise, we should see choppy movement. Support is roughly around 6,800, and it's still going to well, at least from this swing. So from 6,800, now it's just forming a higher low, but we still have a chance for it to resume the rally and going back to test 7,000. Okay, so far the swing is still up, but slightly medium term, this is still a sideways market from 6,800 to about 7,000.